Hey traders, this is Ron Haidt at Market Tamer. Happy Wednesday. Hope you guys had a fantastic day because the bulls sure did. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the Dow ETF DIA. So this is a 2-day chart. Each candle represents 5 minutes during the day. And we gapped up at the open ahead of the Fed talk. We then sort of drifted sideways right till 11:55. Then came 12, Fed started talking, and it was just pop. We went from just under 250. Within 10 minutes, we were at 252. That's 200 Dow points in 10 minutes. The market just surged. We then paused a little bit and then closed right up into the end of the day. Volume today was good. If I use a 1-year chart, was it amazing? No. Was it good? Was it decent? Was. And you know what? Price action rules. So what do we have going on right now? We have the formation of like a W type pattern. This is now looking like a double bottom. This is looking like a reversal where you have a gap down and then a gap right back up. Yeah, the volume was bad, really low. And I commented about that exact situation in a previous video. I said, you know, this is a reversal candlestick pattern. However, the volume's missing, so it just can't be trusted. Well, now we're getting follow through. I would love if this volume was way up here because that would be a massive confident type statement. Right now, it's just a good one. We have this move up. The 50-day could be in our way, but notice we also cut through it like a hot knife through butter recently. So I'm going to discount the 50-day SMA in orange. The target technically is going to be back up at that swing high, which is around 262. You know, that's $9 or 900 points or so. If we take a look at the SPY, which I have a bullish position in, SPY volume was a little better, 127 million shares. The W bottom, we even closed above the 200-day. Now, if we go to the SPX and we zoom in here on the SPX, we're not above the 200-day yet. There's sort of a confluence coming in around 27.75 on the SPX. And then we take out this high, we go back up there. If we go to the SPY, we've beaten the 200-day now, the 50 days right here. I'm going to say the same thing. Because of all this choppy action, I'm going to ignore the 50-day and say the technical target's up there around 281. If I stop here with the diamonds and the SPY, I would not want to go below today's intraday low. So for example, let's say I wanted to establish a virtual trading position, bullish position in the SPY. And if I were to get in at 274.58, if it gets below on a closing basis, the intraday low today, which is 268.33, it's a big range. I just wouldn't want any part of it. Now you could make an argument and say, well, geez, if you get down to that low, how about just coming down here? You got to have something because that's another, $2, $3, $4 till you get down to this point, $5 to get down to this point. So it needs to stay above today's intraday low for me who want to remain bullish as a example, educational example. If we go to the Q, and you know what, let's just do it on the diamonds too. Same thing here, closed at the highs of the day. The intraday low, 248.59. That's about 500 points would have to be given back on a closing basis. And if that happens, I want no part of this bullish scenario. And then we go back into this probably a trading range, or maybe we go down and break the lows. Who knows? At this point, though, good move. Targets are those previous swing highs. Let's take a look at the Qs. Now, the Qs had really good volume. Not amazing, but if you compare the diamonds, the spiders, or the Qs, they were the best. They got way above that previous volume from over the summer. In fact, we even took out some of the other days where we had nice up volume. We got above the 5-day in blue, 20-day in red. However, there's confluence coming in at 172.50, which is the 50-day in orange, 200-day in purple, both simple moving averages, both institutional moving averages. We get above that, I would then probably ignore this high and then come right up here. This is still a lower low, but if we take out that lower high, the lower highs are gone. IWM, 2.47%, good spike in volume. It's not even up to the 50 or 200-day yet. Given the proximity of the 200-day and the 50-day and the high, as long as we get above the swing high, I would say it looks like a go. And here is MDY. Did a little less good, only up 1.99%. Volume, not that great at all. But again, highs of the day, same situation. You get above these highs and you take out the moving averages, that's bullish. But, I usually go back to the S&P ETF, the spiders. Like I said earlier, I have a bullish position in it. Still, this is my marker for the whole market. We're above the 200. We get above the 50, That is another green light. It is another bullish technical buy signal. So looking good, but it needs to stay above today's intraday low on a closing basis. Now, with the market surging the way it did, okay, you'd think the VIX would have just been plummeting, right? It was only down 2.79%, which gives you some pause if you're a bull, because you say, well, geez, if things are better and the Fed's not going to raise rates, why didn't the VIX crash to like 15 or something, or 14 or 13? It's still at 18.49. Again, some caution here. I'd like to see the S&P get a little bit higher, the Dow too, but the major indexes are on technical buy signals. So it's hard to argue with that. If we end up rolling over tomorrow or the next day, I've given an outline of what we need to watch for. So you have it both ways. Here's Apple. So they beat Apple all the way back down to the May earnings report. We almost went down and filled the gap to about 166, 167. That would have been the target. Got about $3 from it, and then we would have come down here to 160. But where we stand now, good volume today. The 200-day would be the target, and the 20-day, which are right around 190, 192, looks like $10 higher yet. And then if we go to NVDA, this was a stock I keep getting a lot of questions on. It was up 4% today, but it needs to get above the 20-day EMA in red. It just keeps staying below it, so we need a change in that trend. We got to get above it for the bulls to get the edge. If we get back up there and get rejected, it looks like a good bearish opportunity, frankly. Google tacked on nearly $40, 3.75%. Volume good, not great. The 50-day, I want to get above the 50-day. Why? Because we got above the 20-day back here, and we fell right back down. This is a good sign. Above the 50-day bullish, above the 200-day even more bullish, than the target is back up here. And if we look at Amazon, remember, this is a seasonally bullish stock this week. I think the track record was 80% for immediately starting on the Monday after Thanksgiving. This one surged 6%, big, nice volume pop. The 200 days here, the 50 days here, the 50 days tying in with a previous high. We get above 1750. I think we can make a run right up here from a technical perspective. And then there was cloud news. Check this out, CRM, which is Salesforce.com. Company had earnings after the bell last night. It's amazing what happens when you have a good earnings report when the market's surging. Look at that volume spike, 24 million shares. It was colossal. It's dwarfing. I mean, we'd have to go back 2 years on a daily chart and not even see this kind of volume. So this is a big deal. There was back and forth, closed near the highs of the day. You're already digesting some of this consolidation before we broke through the 200-day. Frankly, I could wait for a close above the 50-day, make it feel a little more bullish. That'll add a technical buy signal, but the target really is up here now. Again, 50-day to be sure from a technical probability perspective, then it's up there at 160. And with Salesforce ripping, look at Adobe. Adobe was up 7%, nearly $17. Now they have earnings coming up in December. Typically how Adobe trades between sort of September and December, the last 3-4 months of the year, it lollygags around up, down, up, down. And then January 1st, rock star. We talked about it last year and how it was amazing from a trading perspective. Well, with CRM rocking already, that kind of volume with Adobe, this might start running ahead of time. Maybe it's not going to be the lollygagging into the end of the year, and we just might start now. Adobe, though, interestingly, the 50 days at 248.71. We finished at 249.21. 50 cents to the penny above the 50-day. That's not very much for a $249 stock. That being said, another positive close tomorrow. It puts the little double top up here at 275 as the target. So if I wanted to trade Adobe from a seasonality perspective, I'd rather wait to January because that's when it's, quote, proven. Maybe I could start with a smaller position now, a third or half size, and then wait to December for the rest. Because I can't be surprised if the stock has trouble going up right now. Historically, it really doesn't. But with Salesforce.com having such a great number, it just might help bring this one up too. So I love trading with seasonality, but there's times, in my opinion, to believe more strongly in it, and that's when the seasonal window is the strongest, not now. That's why I'm saying maybe a smaller position if I wanted to do that. How about Burlington, which is no longer Burlington Coat Factory? Massive volume. Other retailers are getting taken out behind the woodshed and then some, and we're going to look at one. But this one held the 200-day massive volume spike. That's the line in the sand. The 200-day SMA in purple, institutional moving average, they held that sucker 5 straight days. And today we get the pop. 175-ish is the target, and then sky's the limit again until it rolls over. And how about a stock that went down? Tiffany's. Down 11.82%, massive spike in volume. It's already testing the swing low from April. And this one is classic. Breaks the 200-day in purple, tries to get back above it in October, tries to get back above it in November. We just keep on coming down. Now you're testing the April low. If the April low can't hold, there's a lot of consolidation back here. So I would probably say about 85 would be the target, but the big move is now over. I mean, sure, it might gap down another day or something, maybe 2 days, but now you're going to come into this. We break 85. Holy moly. I think we're going to come all the way down here to 75. So a lot of stocks to watch. Bulls have the edge in the major indexes right now. Yes, volume could have been better, but price action rules, and we closed the highs of the day. Intraday, lows need to hold on a closing basis. As long as that happens, bulls get the edge, or at the very least, it's no longer bearish on the daily charts. Okay? Look forward to seeing you in the next video, gang. Have yourself a wonderful rest of the day. Take good care.